Good afternoon, and welcome to the 5 Practices to Keep Your Branch Relevant webinar, brought to you by FMSI. Thank you for joining us. My name is Chad Davis, Senior Vice President of Marketing at FMSI, and I'll be the moderator for today's call. Today we're going to open things up and talk about the current state of the branch. We're then going to move on and discuss traditional account holders in the branch. Following that, we're going to cover some hiring practices that work out that are beneficial for people in the branch. After that, we're going to discuss the modern branch and discuss how things have been changing from the traditional approach. After that, we're going to discuss adopting best practices from other industries. And toward the end, we're going to discuss risk and compliance reviews. And then toward the end there, we're going to have management tips. And at the very end of the presentation, we're going to follow up with an open discussion, including a Q&A session. You will have the opportunity to ask questions throughout the webinar. On the right side of your screen on the control panel, there is an area for you to type questions. We will answer questions immediately following the presentation. Today's speakers include Gordon Williams, the FMSI EVP of Business Development, Anthony Burnett from Level 5, he's the Chief Evangelist there, and myself as the moderator. At this point, I'm going to pass it over to Gordon Williams, who will go through the first part of today's presentation. Gordon?
Thank you very much, Chad, and thanks to everyone that has taken some time to join us today. We're going to begin our conversation today by discussing some of the current trends that the banking industry is currently faced with addressing. It's no secret that technology is changing the landscape of retail banking at organizations large and small. Online and mobile banking technologies have been driving transactions out of the branch since their inception due to incredibly high adoption rates from consumers. The impact of this is being felt in retail offices as they are seeing a decrease in transaction activity by over 45% since 1992. This is pushing institutions into a virtual space where other technology-centric companies like Apple, Google, and a number of Silicon Valley fintech startups are playing an ever-increasing role in the financial lives of consumers. According to an estimate from Oliver Wyman, it's been reported that venture capitalists have poured over $23.5 billion into these startups in the last 2 years alone. One interesting yet simplistic comparison to make is comparing the revenue that Apple and Google generate per employee compared with some of the large banks and credit unions. When looking at 2014, Apple generated nearly $2 million in revenue per employee. If we were to compare that number to Bank of America, you'll notice that they generated nearly $600,000 in revenue per employee. What do you think would happen if some of the high-tech companies started aggressively pursuing the financial services vertical? A recent survey of millennials found that 73% would be more excited about a new offering in financial services from Google, Amazon, Apple, PayPal, or Square than from their own nationwide bank. This survey result is the tip of the iceberg to a much deeper issue of consumer perception that institutions, financial institutions, are late adopters to technological advancements. However, perception and reality can be two very different things. In the last decade, institutions have made significant progress in developing their technology offerings, especially with mobile applications. According to banking analytics firm RateWatch, 82% of institutions are now offering mobile banking to their consumers. Despite these developments, a critical question remains. Will functioning mobile applications and online banking services be enough to sway consumers who have not been in the branch for years from switching from their traditional institution to take advantage of whatever added benefits Google Wallet or Apple Pay begins to offer? Perhaps greatly improving technology and process within your branch office could be the competitive differentiator that you really need. Competing more in the virtual world will likely leave many institutions in a desperate situation against technology experts chasing a slice of the financial services revenue pie, challenging you to re-examine your branch strategy. Maximizing the impact of your strongest competitive advantage, your branch, can be a game changer. Account holders who have migrated away from the branch and have become heavy digital users, they're still sometimes seeking out the branch for advice on financial products and services or those higher quality interactions with your employees. While these individuals come to the branch far less than their transaction-centric counterparts, their visits are far more valuable to your institution. Higher quality interactions at the branch can more likely lead to product sales and wallet share growth, which is many times very difficult to achieve through mobile or online interactions. Keeping your branch relevant by updating some older practices can be a critical competitive advantage for your institution. Next, we're going to discuss the 5 practices that can help to keep your branch relevant. The first one that we're going to focus in on is to focus more on sales-centric activities within your branch. One of the greatest values of your branch environment comes from the aforementioned financial advice given during higher quality exchanges between account holders and branch employees. The institutions that have the right employees in place to better handle these in-person conversations will likely see significant increases in product sales. For some branches, the right employee may be a universal type associate. Universal associates are staff members that can perform multiple roles, including transactional roles, sales roles, and service roles. 2 major advantages of the universal model are that it empowers you to have the ability to reduce your branch labor costs by consolidating the need of multiple roles to handle demand into fewer employees, while also having the ability to improve your sales and service by increasing your opportunities that account holders are spending with highly skilled employees. The Universal Associate Program may or may not be a good fit for every branch within your footprint. In determining which branches are best suited takes a much deeper dive into your own unique environment. Our second idea is to hire individuals without banking experience. When searching for a candidate in any typical job search, the hiring manager usually looks for those with industry experience. This factors in especially well as it relates to reduced learning curves around specific industry knowledge. With searches associated with finding the right branch employees who can best handle higher quality interactions, hiring managers are possibly leaving out an enormous pool of potential all-stars if they require financial services experience. Simply put, some people are salespeople and some people are not. You're much more likely to teach a good sales representative product knowledge than to turn a branch employee without the sales intangibles into a consummate seller. Consider candidates with any and all types of sales experience, but search specifically in the retail industry. These individuals are adept to working with the average consumer off the street, and they oftentimes are used to working hours that differ from traditional banking hours. Next, Anthony Burnett, Chief Evangelist of Level 5, is going to share some ideas on our third way of keeping your branch relevant and speak to branch model and design updates. Anthony?
Yeah, thanks, Gordon, and thanks for everyone for joining today. One of the great things about this topic is the actual design and implementation in the branch. It is used to facilitate exactly what Gordon's been talking about. Number one, talking about a more sales-centric focus on these high-quality interactions. The role of the branch has changed for most financial institutions, especially in the community-based model around the country. We work with clients all over the country, and this is a similar theme. Yet, there are still branches that are very transaction-focused inside your footprint. So we want to make sure we tailor the approach and the branch itself to the markets they're in and make sure we're not trying to create a one-size-fits-all. And as Gordon pointed out a second ago too, and that really pertains in your hiring practices and getting folks that have more sales experience, that's going to be pretty difficult to do to sell in a branch if the facility is overrun with transactions every day. Believe it or not, in markets all over the country, we are still seeing teller lines go in. We just opened up another one in Birmingham, Alabama a week ago, where the financial institution is still very heavily transaction focused. In our review of the branch design, we're going to run through several categories and talk about how when we update the branch, we really have to appeal to all the generations and yet still have that focus on these high value interactions for sales and service, and then allowing that branch to really synchronize the customer experience model that the bank or credit union is striving for. That's your best opportunity to get a face-to-face interaction with a customer and inside the branch. So we really want to tailor that branch so that it facilitates the experience we want, whether it is needed to be totally transaction focused, or do we have margin to dive deeper into a conversation. Technology has been a great accelerator in the branch space in regards to cash equipment and the new advent of things like interactive teller machines, which allow banks to operate in a model that allows face-to-face, deeper interactions, transactions, all remotely. So we really want to talk about today sort of how do we customize that experience per market that we're in so that our brand is communicated clearly, and so your markets and your communities understand your value proposition. So let's look at sort of one of the things we need to take a look at from generation and how folks are interacting at the branch. So here's a slide I love showing because it paints a picture of probably the folks on this webinar, and it paints a picture of the folks who come inside your branches every day. We have folks from different generations interacting at the branch. And what was normal for one generation is completely foreign to the next generation until they get up to speed. So the greatest generation grew up in an analog world. They wrote letters. I was having a conversation with our CEO the other day, and he was a Marine, or excuse me, still is a Marine, retired from the Marine Corps, and he was talking about how he used to mail letters back and forth to his wife, and sometimes those letters would take weeks to get. That's completely foreign for a millennial who tends to operate in real time because that's the generation they grew up in. Myself, I'm a Generation Xer, so I understand a lot about technology, and now I have adopted and behaved more like a millennial, but yet my parents are boomers. So this creates two real challenges for the bank. Is number one, you want to make sure that we build an experience in the branch that doesn't alienate any of these generations. We can't tailor toward millennials and not also provide for the customers who brought us here, nor the other way around, nor can we forget about millennials and the 80 million of them in the United States that will be here in the next 5 years in lieu of an older generation. So the experience in the branch is important because we have to tailor to customers and to our own employees as well. So let's talk about what are those high-value interactions in the branch. Ernst & Young reported a consumer study within the last year talking about consumer channel preference broken down by banking task. And what this graph shows you is the propensity of consumers to use the branch. And those are the things highlighted in red. The top couple of categories take care of those routine transactions. In technology, mobile platforms, web platforms, as you can see, now are often the preferred way of a consumer to interact with the bank for routine inquiries, balance transfers. But Gordon, if you'll click the next thing, you should see a highlight of the high-value interactions in the branch. When I have a problem, when I want advice, when I need to make a sale in regards to a loan or a product, what this tells us is that at least 65% of all sales occur in the branch. And for a bank or a credit union, this is why we still need physical branches. It's because when a consumer goes to close a deal, they do it in a physical environment. However, we all know that there are more than one way for our consumers to interact with us. The branch is part of it, but in the omnichannel model, where we have physical, virtual, and automated components, this next slide is a good graph that talks about how all three of these channels have to work together. And omnichannel is a buzzword in the industry that some people have grown tired of. And omnichannel is different from multi-channel. Most of the folks on this call probably have all three of these channels in place. They have physical branches, they have ATMs, and they have mobile or web platforms. However, it is the synchronization of all of these three components into one customer experience that defines an omnichannel distribution network. And it is the physical branch that synchronizes financial institutions' customer experience, because that's where the high-value interactions occur. When a customer wants to know what the bank is like, what the credit union is like, their experience, for the most part, is set in the physical branch. So let's look at a few examples here of customer experience in the physical branch. Here's a model adopted by a credit union in Michigan. This is ECCU. And as you can see, inside the branch, there's nothing traditional about this branch. The customer experience begins for ECCU as soon as a customer walks through the door. They have a greeter station up front on the left side of the screen, as you can see, with the ECCU logo. So every customer who comes through the doors is greeted warmly by a customer service rep. And then based on that interaction and what that customer wants, it's whether that customer is then filtered for a transaction point at a pod, which is a custom piece of millwork outfitted with a cash recycler, or they are taken to an office where they can have a more personal experience. Now, the design in here has a purpose. It is to facilitate an engaged conversation with a customer or member. And I wish I could tell you that it's just the environment that's the key. There is another component, training. And I know we're going to talk about that earlier, and Gordon referred to it in the early part of this webinar, hiring people with sales experience. But as we look at the rest of the branch in the next slide, you can see that the new culture and environment is actually all working together. You can see branding in the walls, achieving life's dreams through personalized financial solutions. ECCU is clear on who they are, and they're communicating that to their customers. The great success story with this credit union is this new culture that has started with the management team and training and then facilitated by this environment has led to a loan and deposit improvement of 88% loan to share 2 years ago to over 92% now. So that means another $30 million of organic growth for this credit union. The next example talks a lot more about how technology can create efficiency in the branch. Here's an example of a bank in Mississippi, B&A Bank. Some common elements you see from this design from the last one includes the lack of a teller line to facilitate a transaction. Again, B&A Bank is moving toward a more engaged culture. In this example, in the back of the picture underneath the B&A Bank logo, to create efficiencies in the branch for this customer, we brought the pneumatic tubes into the lobby. So the customer service reps that are working, the universal bankers that are working the lobby at B&A Bank can also work the drive-through at the same time. This saves on space inside the branch, and we don't have to provide for another area in the facility, so branch sizes are getting smaller thanks to technology. Technology also can be help in efficiencies in offering services after hours. The next slide talks about and shows an example of how in certain cases we can provide full service 24 hours a day. Now in this example, this is a micro branch in Minnesota, and this facility is a storefront. It's an end cap in a shopping center. But when we were designing it, the client, Ultra Federal Credit Union, wanted to have a way for their members to interact with them 24 hours a day. So this vestibule lock, there's a key swipe on the door tied to their debit card, which allow members to interact in a 24-hour vestibule. We're also seeing some of this come to play in ICMs, and ICMs are a huge player. On the next slide, you'll see an example of an ICM in a drive-thru, where a customer can interact 24 hours a day with the bank in high-value interaction or transaction-based components without leaving their car. So the one on the right is an example of an install in a drive-thru. Brand Bank here in Atlanta, where I live, has also established the interactive teller model inside their lobby. And they recently have reported that their move to interactive tellers has been directly proportional to another $140 million in growth. So we see technology as an accelerator. Let's talk a little bit about brand in a banking model. The next slide shows a very non-traditional way to engage customers. Now, believe it or not, this is in Conway, Arkansas. This is for Bear State Bank. And Bear State is adopting a new way of engagement. There are no teller lines. There's no traditional furniture in here. They're really embracing their brand. They want it to be fun and engaging, and they want to set the bank apart in the marketplace. On the next slide, you can see that the flow of the branch includes, on the left side, underneath that bear on the wall, that's actually a greeter station. So when customers come in, a greeter can triage and help understand why the customer's in the bank. In the back of the branch near the other bear is the pod or the transaction point. But it's really all about have the ability to have more conversation with their customers. They want to cross-sell more in this environment. Now, it's one thing to remodel a branch on the inside to facilitate an environment so that people think you're different. It's quite another thing for people who drive by your branch to know you're different. So in the next slide, you'll see what this bank elected to in the exterior changes so people know you're different. Same branch. It was a very traditional facility, but we added some architectural elements so that customers who drive by the bank know they're different and will be intrigued to stop by. A recent study shows that the number one reason why people choose a bank is because of location. A close number two is customer service. Now, if we dive deeper into that talk and ask the people why they stopped, because most banks tend to be located close together, why did you choose one or the other? The exterior appearance of the branch made a difference in why they went into one or the other. So Bear State Bank, albeit this is a more aggressive model, the exterior changes and the interior changes in your brand message, we have found need to work together. So Gordon, I'll hand that back off to you.
Well, thank you very much for sharing that with us today, Anthony. We really appreciate it. And those are some awesome ideas on how to really differentiate yourself from other organizations. Some other ideas we're going to share this afternoon, the next idea on how to keep your branch relevant revolves around evaluating what other industries are doing as well. Generally speaking, most institutions stay in the herd when it comes to technology adoption and process improvement. With a whole world full of great ideas and best practices spread throughout other industries, it's a missed opportunity if we sit back and ignore them. Here are a few examples from other industries that you might consider implementing to really set yourself apart. First one will be restaurants, for example, like Chili's, have rolled out tabletop ordering, entertainment, and payment solutions. Similar devices can be tailored to branch waiting areas where your account holders can play games, look up product or service information, and take surveys. The benefits you might realize are your wait times will seem shorter from the member or customer perspective. Your account holders will learn more about your offerings, and you'll also be able to collect invaluable service data, understanding what their experience has been like. Another option are preferred customer programs like Delta does with Sky Miles and Hilton Honors does to their to their guests that they want to continue to have those interactions with. One question would be, how could you benefit from treating your highest valued account holders with white gloves? Reward programs, when done right, are instrumental in creating that brand loyalty and creating promoters of your brand. Third idea is considering appointment scheduling for your consumers. Some retail stores like Sprint now offer the ability for their customers to set appointments through smartphone applications or through websites. As consumers grow accustomed to setting appointments for their retail visits, it's logical for them to expect the same capability from you. If you would like to learn more about this type of technology and how it could be leveraged, whether it's through your mobile banking application or through your website, feel free to reach out to us at FMSI and ask us about our Omnix Appointment Concierge. While risk and compliance are extremely important in the financial services industry, it can also often be a major roadblock for many high-potential projects, and it can slow innovation. One example of that is replacing tellers with self-service technology. Some organizations have a thought that this is too risky because tellers are oftentimes the first line of defense and help to mitigate risk and fraud. With the long-term profitability gains being so high with self-service technology, maybe you could consider a pilot program to help determine the actual number of fraud cases with self-service technologies versus tellers. Another example of the compliance side is always having at least 2 employees to open and close branches for dual control for security and fraud. Many branch staffing forecasts, which we at FMSI prepare for our customers on an ongoing basis, reveal opportunities to improve optimization of your workforce by having only 1 employee open or close your branches, especially in low transaction volume environments. One of our clients have their branch employees actually call the call center and stay on the phone with them until they get in their car after they lock up a branch. Others, they rely on more sophisticated security camera systems with actual humans monitoring the branch during openings and closings as part of their risk management protocol. Just because something has always been a policy does not mean it should not be challenged. As branches become less cash intensive and leverage technology to minimize the risk, consider revisiting some of these policies and see if they can really be changed. We'll wrap up our presentation portion of today's webinar with a couple management tips to help as you implement changes throughout your retail footprint. As alluded to on the previous slide, forecasting your inbound activity to an office allows you to really align your staff with your consumer demand. Given the fact that most branches are still handling a substantial number of simple deposit transactions, you might consider implementing a staff scheduling software to help put the right number of employees at the right place during the right times. This proven approach, which includes better utilization of part-time employees, leads to significant labor cost savings and reduces staff scheduling headaches. Our second management tip is to get employee feedback and buy-in before you make certain changes. A panel of select employees for you to solicit feedback is a great way to understand if there are any consequences to the changes you are considering. We'll share one example with you. One of our customers shared with us that they were going to discontinue account holders having to call in to a call center for their new username and password. When this idea was shared with their employee panel, one of their top call center agents spoke up and shared that that was typically a golden opportunity to understand the profile of that customer or member and cross-sell additional products that are meaningful to them. Once management had this feedback, they actually aborted the change and likely had many more sales opportunities as a result of keeping this in place. In conclusion today, survival of the fittest does not mean the strongest will survive. Rather, it means that the ones who adapt the best to fit their environment will survive. In an ever-changing financial services landscape, it will be those that adapt to the consumer needs that will have the greatest success in the future. We will finalize our time together this afternoon by going to some questions from the audience, and Chad will lead us through those questions. Chad?
Yeah, thanks, Gordon, and a special thanks to our special guest today, Anthony from Level 5. Both a recording of this webinar and the PDF of this PowerPoint will be available on our website. I will email a direct link to this webpage to everyone on the call. So now let's get to the Q&A. Looks like a few questions have come in throughout the webinar, so looks like the first one here is for Gordon. Gordon, you mentioned considering universal associates. Any tips on where to start and some factors to consider?
Sure, that's a great question, Chad. We've heard a lot of organizations that sort of blankly state they're moving into a universal environment with their workforce. And in terms of where to start, one of the first things we really challenge organizations to evaluate is what is the transactional environment of an office, and then of course what are the sales and service activities tied to an office as well. Oftentimes organizations might not be dialed in on the exact numbers tied to some of those activities, and there are certain thresholds in terms of transactions and sales and service activities where it can really make sense to leverage a universal workforce, and where it can really be a situation where you're actually going to increase your cost by implementing a universal workforce. So if you have questions around what those numbers are and where it would make sense, we'd be happy to have some further discussions with you to talk about how you can evaluate where universal associates fit into your fold.
Great. So move on to the next question here. This one's for Anthony. Anthony, this one says, we've been discussing all the components in today's webinar, but in regards to the physical changes in the branch, how does a bank get started?
Yeah, that's a $60 million question, because it's all great to see a lot of the new latest and greatest things. It's quite another when the bank or credit union is a very traditional background because of the way they were created. Most community banks were started as local businessmen trying to provide service and relationships, and then they began as transaction-focused centers revolved around commercial banking. Credit unions, have a more transaction-based background. But as Gordon has pointed out, the number of interactions inside the branch are fewer, but we have an opportunity to really capitalize on those high-value ones. Well, how we typically recommend is all banks and credit unions need to start first by understanding their markets. And then they need to understand how their branches are interacting with those markets. So we would recommend that the banks start by evaluating those markets carefully and then trying to align exactly what's needed. The other challenge is any kind of branch transformation and changing of an environment to match a new culture shift. Those things aren't free, Chad. So those have dollar signs associated to it. So doing studies, doing ways of market analysis, and these are things we offer at level 5, and 90% of our design build work comes out of study work because we want to help the bank, credit union establish a business case. So that's what I would recommend. It's a great way for the management team and the board to get on the same page in regard to return on investment for any kind of changes they're planning for the branch to match a new culture.
Perfect. Makes sense. So start off with some sort of analysis study and then move on from there. Good stuff.
Correct.
All right, Gordon, next question is for you. What sort of metrics do your systems feature that help quantify sales effectiveness during these higher quality interactions?
Sure, that's a great question. For organizations that leverage our Omnix Lobby Tracker, there's a lot of different key performance indicators that allow you to better understand what your sales effectiveness looks like. The first thing is understanding the exact number of members or customers that your employees are seeing face-to-face. The next piece of that is understanding what % of those are actually a sales conversation versus a service conversation. And the remaining piece would be what % of all those sales conversations are actually resulting in a cross-sale, and what's a cross-sale ratio by employee to understand who our strongest performers are. Those are the high-level ideas and some of the indicators that you can really look at for sales effectiveness. But of course, you can look at that from an institution level down to a branch level and down to the individual contributor to really understand how that compares across your workforce and branches.
Very good. Sounds like some very important metrics there to keep track of. Another question here for Gordon. Gordon, does FMSI's appointment scheduling application allow account holders to schedule branch appointments via their smartphone?
Yeah, absolutely. The way our customers leverage that technology is they can have it embedded on their website or within their mobile banking application, and that allows your customers or your members to really access that then through their preferred channel to make sure they can schedule time face-to-face with a person of the right skill set at the right time.
Great. Okay, the next question here is going to be for Anthony. Anthony, are there any performance metrics around FIs who embrace these changes? And if yes, what's in it for the bank?
Yeah, I mean, that's I've yet to meet a CEO who is faced with investing hundreds of thousands, if not millions, into changing the way they look and feel and wanting to understand, guys, I understand this is going to make us look better. What's in it for me? And what's in it for my stakeholders? So one of the things I shared earlier in our talk was for the credit union in Michigan, one of the great things they have seen happen as they've trained for a new culture and then provided an environment for that is a huge swing in loan-to-share ratio. So they've moved from 88 to 92%. We have a client in Kentucky that in less than 3 years moved their a similar ratio of loan-to-deposit from 72 to 80%. And they did that by being able to create the culture within their workforce and then provide it in the environment and then execute. Another client in Alabama, a small financial institution, 6 years ago they were $100 million in assets, and now they're over $165 million. In their first 50 years of existence, Chad, they went from 0 to 100, and then in the last 6 years have moved to 165. And they did that through a similar model. They understand their markets, they train for it, and then they create the environment. So we have other success stories like that. Another client in South Carolina over the last 7 years has experienced 37% growth. And those, we're talking loan growth there, by being able to be more efficient. They're using more technology and allowing the technology to handle the routine and training their frontline people to ask better questions. So we've seen it work really well in markets all over the country. And again, as we pointed out earlier, it's very systematic, understanding your market and then making changes based on a business case.
Very good. So we have time here for a couple more questions, and then we'll close out the today's webinar. Next one's for Gordon. Gordon, how does your appointment scheduling application help employees manage account holders with appointments?
Sure. Well, if I understand the question correctly, I think it boils down to it helps with a lot of preparation on the employee side when those account holders are going to be coming in. So let's just walk through an example. Let's say I'm a member at a credit union and I reach out to schedule an appointment for a mortgage loan. Well, all of a sudden, as an employee at the branch office, I get that notification that somebody's coming in for a mortgage loan. I can start doing the research on that member before they ever arrive and be prepared for those conversations. Maybe through my research, I realize that the account holder has a savings account with us, but really nothing else, and they're coming in for a mortgage loan. So we can probably draw some conclusions that there are a lot of other products that they have with other banks or other credit unions that we're missing out on. By being prepared for those conversations and building my plan for that meeting, all of a sudden I'm able to start asking those questions and ask questions like, what would it take for us to have more of the products that you work with other institutions on here at our organization? And maybe all it takes is that question. And I think that's one really important thing that comes out of the appointment scheduling application is in how to manage those appointments with consumers is you're really able to be better prepared and formulate the right questions to that member better, that customer better, and then also grow the relationship further than what they may have expected upon entry into an office.
Perfect. Good stuff. So it's all about the preparation and understanding your account holders better. Gotcha. So last question for today's Q&A session and webinar. This one's for Gordon. Gordon, does your staff schedule allow for lobby employees? And if yes, where do you get the forecast information for this?
Yeah, absolutely. So in terms of the staff scheduler, you are able to schedule your lobby employees through that technology as well. What we've done is, I mentioned our Omnix Lobby Tracker earlier and how that application is used to really measure and understand all of the sales and service activities taking place in a branch office. And what we've done is actually create an export from that application that we import to our forecasting and scheduling technology. So by us understanding every face-to-face interaction taking place on the sales and service side of your branch, and then using all those data points to understand the future activity of your consumers, we're able to automate scheduling of your sales and service employees or your lobby employees based on actual forecasted demand that we can uncover from the technology.
Good stuff. Well, with that, we're going to end today's webinar. I want to thank everybody for taking the time and joining us for today. And please make sure to check out our resource library for additional recorded webinars, white papers, and published articles. Thanks again for everybody, and have a great day. Bye-bye.